All right, guys. So today we have Palantir earnings. It started off as like a pretty red day in markets, and we kind of rebounding back up a little bit. Specifically, Apple doing really well today. Palantir not having such a great day, but again, we're going to cover their full earnings report, all that good stuff live. I'll put the music on. You can see Palantir on this right side along with the Q. So we're going to look at Palantir today. They have dropped their Q4 earnings report. If you don't know what Palantir is, it's kind of an AI software company based around building AI for different companies. Earnings report. If you don't know what hype over the last few quarters, we're going to do a poll on stream right now. Does Palantir beat or miss their Q4 earnings? Beat, miss. We're also going to do a poll live on Twitter as well, or X, I should say. Ooh, Q4 earnings. Let's. All right, so Palantir, PLTR. We're doing polls everywhere. All right, so we got that poll live as well. Let me get some music playing here. We should still have the music up. Yeah, there we go. You know, if you hear the music. Hey, what's up, Matt? What's up, William, Klaus, Biggie, Roe, Moore? All right, so the earnings are technically scheduled to be released at 4:05 p.m. Eastern Standard Time. We also have the earnings call at 5 that we're going to stream as well. It's really the only big company we have today. They're expecting 8-cent profit per share. Revenue of, what's their revenue expectation? Revenue is expected at $602.55 million. The earnings call. All right, so again, we got their numbers up on screen. 8-cent EPS profit on revenue of $602.5 billion. Earnings going to be released after the close. Earnings call will be at 6:05, or I'm sorry, at 5 p.m. Eastern time. Again, Palantir down at 667s here, and again with spilling my stevia cola. When you look at stocks like Nvidia, you know, Nvidia has been on a tear, and this is very relevant for AI. You know, so Nvidia has been on a tear. It is very relevant for AI, and yeah, we'll see if we'll see if we can have some good action here for Palantir. You know, I might end up taking a little bit of profit on Apple. You know, Apple. You know, we bought this one a couple days ago. We added to it. We were already in this position. We're up about 150 bucks. I think I could probably take maybe a quarter of this position off, just to lock in some of the Apple gains that we've made. And again, Palantir still at 1660s. But this could all change, though. I mean, this is just a dip ahead of earnings. We'll see if we get some good action here. Again, if you don't know what Palantir is an AI software company. So they deal with like AI technology a lot, AI platforms like data technology. So like they have different software platforms for private businesses that, you know, allow them to do a bunch of good stuff. CEO is Alex Karp. And I am in Palantir. So with AI hype, Palantir is a company that, you know, for a while people thought would struggle, but this AI movement, you know, if we look at, we'll put this up on the left side too. You know, over the last year, it has had a nice resurgence. You know, it opened the year up at like $8.50s a year ago. It is now at almost $17 a share. If we look at, you know, their EPS graph, you know, despite what people say, you know, some people label this a meme stock or whatever you want to call it. Despite that, their EPS graph is very good, in my opinion, very good. Again, I'm not telling you to buy anything. I like it. I'm in it. But I'm not telling you to buy anything. But look at this EPS graph, all right? Again, this is EPS graph. So if you don't know what EPS is, it's earnings per share. It's a gauge on profitability, right? And so this company, obviously, back, if you want to look at the dates behind this data here, this company, go away, ad. Okay, so you can look at the dates here. So they've been losing money as a company, which most young companies do, since 2020. Recently, though, they have started to gain some steam all the way from 2020 to today. You could say they officially turned the corner and went profitable in December of 2022. In December of 2022, they've been profitable, and since then, they've had 4 quarters of positive profitable EPS, you know, so that's pretty solid. You can see they're again, pretty nice little graph here going from, and most startups are not profitable right off the get-go, just to put it into perspective, right? But the trailing 12-month looks good as well. So the trailing 12-month is looking solid. Again, if we look at something like their revenue graph, you know, so again, EPS is margins. It's kind of a gauge on profitability. Is the company profitable? Is it not profitable? You know, whatever. Their margins are good. They're better than they were. They were obviously losing money. Their revenue, if you look at this, and let me consolidate this into one specific platform. Look at their revenue. Revenue, again, since 2020 has been looking really, really solid. Each consecutive quarter, Palantir posting more and more revenue. And again, I'm not telling you to buy anything. I like Palantir. I'm not an investment professional. And remember, guys, anytime we stream anything here, let's go and put it up. Remember, I am terrible at this stuff and have no idea what I'm talking about. Always remember that, guys. Terrible. No idea what I'm talking about. We're going to cover Palantir earnings today. We're in Palantir. We hope it goes up. And the revenue, guys, again, looking at this revenue, is pretty solid. Look at the revenue increase. Here's a trailing 12-month revenue graph. You know, so, hey, I mean, I'm for it. Let's see if they can continue this streak of good revenue, good EPS. Today, again, so right now, this is at 558 million. Again, today they are expecting 602. So if today's earnings come in good and they come in as expected, this revenue graph will bump all the way up to about here. So if they come in as expected, again, that revenue should bump up to about there. We'll see if they do. You know, again, I'm hoping they do. I'm optimistic that they will. And yeah, again, let me know in chat right now what you guys think. Looking at our poll numbers here, 82% think they're going to beat, 18% think they're going to miss. I hope they beat. I'm in that 82%. Yeah, Nvidia going absolutely nuts. $695 lifetime high today. So Nvidia, AI stocks are doing well, man. Again, look at Nvidia, $695 basically, just under $700 a share. And so if AI hype is here, it's good for Palantir as well. And again, their earnings drop in about 30 minutes. We got over 100 people here live still, so that's nice. Hey, what's up, Pawn? DWAC. Yeah, DWAC on another weird run. You know, ripped up to almost 60, dipped down to 35s, back up to almost 50. Again, Nvidia over 685s as well, just crazy. Hit 694.97 highs right at the opening bell. What's up, Sam? What's up, Ron? What's up, Nan? And again, we still got, let's put a timer up. My timer's not working yet, so let me put this timer up. We have about 34.5 minutes left until the closing bell. You know, again, Palantir numbers scheduled to be released right at technically right at 4:05 p.m. is when they're technically scheduled to be released. So again, we'll see what that looks like. We'll see if that happens. Got a lot of engagement on our poll online. A lot of people optimistic, of course, regarding Palantir. And again, we're in it. We hope it goes up. All right, so according to CNBC today, mortgage rates went up over 7% again. Bad news for real estate professionals. Mortgage rates still going high. I mean, again, it's very hard for people to buy a house right now. The reason it's hard is because, people are spoiled. Not spoiled, but they're just conditioned to want low rates. A few years ago, rates were 3%. You're going to tell them to pay over twice as much now at 7%. To put it into perspective, that's a major hit. Like long term, the amount more that you pay on a 7% loan versus a 3% loan is shockingly more, right? So it's very difficult to get people to get a mortgage right now. Mortgage professionals, real estate agents, mortgage brokers, they are all struggling. And yeah. So Meta officially 400% plus, as Jim Cramer cried on TV. Another AI potential stock. Absolutely ridiculous. Almost up to $500 a share. I was very wrong about Meta years ago too. I thought Meta was a short at $100. I didn't think they were a short. I wasn't shorting them. I was skeptical though. TikTok taking off, Instagram losing steam. Mark Zuckerberg was horsing around in the metaverse, losing billions of dollars, and so I was skeptical. And they just proved me wrong. Meta flew up, huge gains, huge gains. Thoughts on Eli Lilly? I have leaps for NVDA. I think those weight loss drugs are powerful. I don't know what they're going to do in the future, though, of course. Nobody does. I don't think I would touch a company with a 12 TTMPE. 258 in 12 months, forward PE of 68. Yeah. Well, I'm just glad Palantir is profitable. You must be talking about Nvidia, I'm assuming. Nvidia's PE is really, maybe the forward PE is that high. I don't know what the forward PE is for Nvidia. But again, Nvidia's bottom line has been influenced positively from AI. Like if you look at what they're earning, they're earning so much more money. Like again, if we do the same thing that we showed earlier with the revenue graph, like look at Nvidia's revenue take off since AI became a thing. Like, look, here's their revenue graph. It has skyrocketed, more than doubled over the last quarters since AI became really like big. And so, I mean, I don't think you can ignore revenue increases like this in a company. I mean, we could say they're weak or they're extended, and maybe they are. I don't know. Again, maybe they are. I think they're up a lot. They're up to. Nvidia's up a little bit too much for me to really want to get involved with buying more shares. But it's still a very successful company. I'm not going to short it. All right, so GoDaddy is now partnering with Ethereum name services to allow users to connect domain names with ENS names. Palantirs, I got to look at their forward PE. Oh, it's all right. They're a young startup, though, brother. So it's high risk, high reward. They're a young startup. They're only just now swinging towards a profit, so they're not really one of those like legacy blue chip companies that you want to calculate PE for and obsess over PE. These are growth companies that are small, that are new, that are big risk, big reward. But I like Palantir. I'm in it. I hope it goes up. Supermicro, yeah, I know Supermicro Semiconductors. That's even a crazier. That's got one of the craziest long-term charts. Look at the daily chart of Supermicro. Crazy gains. Crazy gains. BLK ad. Look at this BLK ad. But yeah, Supermicro Semiconductors. Craziness. Yeah, all good marketeers. Like I said, bro, it's all good, dude. Trying to catch back up with the chat. Bitcoin dump. Let's go. Is Bitcoin falling? I haven't even looked at Bitcoin today. It's down to 42. It's down, but again, if it's over 40, it's fine. It's just Bitcoin moves back and forth a lot. Estee Lauder. Huge gap up today on earnings for Estee Lauder. Huge gap. Yeah, Estee Lauder, if we look at this one, we don't really have any other big companies today dropping earnings besides Palantir. This is the biggest one. I mean, they've got a nice gap up on earnings for Estee Lauder for sure. Do you have a divvy portfolio? I got a portfolio. I mean, some of them pay divvies. Other ones don't. You know, my portfolio right now includes Apple, AMC, ARM, Amex, Boeing, Citigroup, Chewy, Delta, Disney, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Coca-Cola, MGM, Microsoft, Nike, Oracle, Pfizer, Palantir, PayPal, RTX, Snapchat, SoFi, SPY, Tesla, Tyson Foods, Walgreens, Walmart, and ExxonMobil. I've been in most of these positions for months and for a long time, you know. So I'm green in this portfolio. It's nicely green. I've been green in it. I've been taking profit into this year. I took profit on some of them. But then I've kind of added back. Like, again, you see me in Apple here. We took a little bit of profit on our Apple position this morning or this evening just now because, again, we ended up adding to our Apple trade and it bounced back. Our average price in Apple's 184s, and so it got up to almost 190. We took some profit there just to lock in a couple percent gains, and we'll sit on the rest long term. But, yeah, some of those pay divvies. Some of them don't. A lot of them do, though. Yeah, Tesla dipped a lot today. It started to rebound back up, though. It hit 175 exactly. Almost exactly 175 if you look at Tesla. And I'm in Tesla, too. But Tesla hit like 175, bounced all the way back up to 180. Now it's over 180, testing 180 now. So it'll be interesting to see what that one does. Yeah, I'm long in it, too. Yeah, it's holding 180. We'll see if it continues to hold. I hope it does. And they might be trying to do whatever to Elon, but it's kind of Elon's fault, man. Like, if you're the head of a company like this, like, you can't really be super political and outspoken about stuff. You got to stay completely neutral. Like, that's what, if you're the head of a very large company like this, that especially a company that sells things to consumers, right? And again, I like what some of the stuff Elon does, and I don't like some of the stuff Elon does, right? So I'm kind of, just think of me as neutral. But just in a business sense, and again, he's a billionaire, maybe, like, who cares what I think, right? But I think Elon, if he wants Tesla to be safe, he's got to stop talking and being outspoken about a lot of different things and just be neutral like any other person selling things to consumers. And again, maybe I'm wrong. I just, as somebody that's in Tesla, I just want more stability there. But again, I'm in it regardless. It's all good. 44% of Americans can't pay an unexpected $1,000 expense from savings. Can you? I could easily do it. I'm not trying to brag. But it says 44% of Americans can't pay an unexpected $1,000 expense from savings, according to CNBC. I could pretty easily get $1,000 if something went. I have to do this regularly, honestly. I felt bad. Like, I'm a heavy, like, one of the things I do splurge on is food. I go out to eat. My whole family makes fun of me, especially if I'm buying food for, like, my parents or, like, family members. If I'm buying food, I buy feasts for everybody. That's the one thing I splurge on. I'm pretty fiscally responsible aside from that. But I felt bad. My son had a birthday party, and my daughter and I went, and I was just kind of going on like a little date with my daughter and taking her out and having dinner with her on Friday. And it was my son had a birthday party, and so her and I went and sat somewhere else. And so sure enough, I buy all this food, like this huge, like that's I buy food, I buy desserts, I bought churros, which were great. They were all right actually. And then the dad from the party comes along and pays for my meal. I felt horrible. I was like, because I bought way too much food for him to pay for, and so I got to be more responsible for food. I buy too much food. I love food, food's good. Tesla, guys, at 181. I agree with you. Let's keep this man focused on the road ahead, 100%. Yeah, AMC at a pre-split price of 36 cents. Whew, man, AMC. Who knew? AMC, and I'm in AMC right now. I'm bummed. My average price at AMC right now is $10.50. It's at 360s. One of the biggest losses in my portfolio right now is AMC, and that's okay. Listen, I'm all right. I'm staying in it. I've been in it long enough. I might as well stay in it. How low do you think AMC can go? I don't know, man. Yeah, maybe he's buying up shares, Sam. I don't know. All we know is spending. That's why most... Yeah. Yeah, I'm in AMC. I'm in GameStop as well. I hope GameStop goes up. Again, if I read the portfolio, I'm in GameStop. I'm in AMC. I'm in Palantir. I'm in SoFi. Those are my 4 meme stock holdings. Is Palantir, SoFi. I wouldn't even call it Palantir. Palantir is actually like a software AI company. I like that niche right now. I think AI is powerful right now in stocks. And so, just to be fair, I think Palantir has more validity than a bunch of these other stocks and a bunch of these other meme stocks that have these big groups of following, like AMC or GameStop or whatever. I think Palantir has certainly more validity in stocks and in terms of general business longevity and outlook. I think Palantir is a little bit safer, but maybe I'm wrong. Who knows? Yeah, I remember MVIS, man. MVIS has been one that people have been pushing for years and years and years. I remember when this one ran. I've been trading and doing this for a long time. I remember when MVIS ran. At one point, it was over 20. This was back in 21 and 2020. Hasn't really done anything since then. Yeah, SoFi is probably not. SoFi is a good company backed by a legit business model. IWM. Russell. Yeah. I don't trade the Russell that much. I don't dislike it. It's small caps though. The Russell's small caps, so it's not really one that I mess with or push around. I get Palantir and Peloton. How dare you, bro? Okay, listen. I'm going to give you the differences between Palantir and Peloton. Peloton, a virtual reality bicycle company that was incredibly overinflated by the pandemic. During the pandemic, everybody bought Peloton stock because they correlated staying at home with virtual reality bicycles. All right, that pumped the price of Peloton up to just a completely unreasonable level. And anytime a company grows this fast, this quickly, they end up wasting money. Then Peloton starts putting out virtual reality rowing machines, solving problems that none of us had. Wasting money building these virtual reality rowing machines that nobody really wanted. And a lot of competition also built up simultaneously, right? So a lot of people started competing against Peloton and putting out their own versions of VR stuff. I go to my gym. There's a bunch of VR stuff, treadmills, everything like that. None of them are Peloton, right? So competition got out there too. And this thing should have just never been, relative to how much it was making, it should have never been up here at 171s, So again, Palantir is a software company. That's kind of more that's a niche that I like a lot more than virtual reality bicycles. I famously did a poll. Would you rather have a virtual reality bicycle or an actual bicycle? And it was overwhelmingly actual bicycle. I feel like SoFi may be on the same path as Palantir. We're just turned profitable in a couple more quarters of profitability could send it up. Yeah, for sure. They both have pretty solid graphs. I think Palantir, again, just going back to these graphs, I think Palantir has really nice looking graphs. I think these are genuinely good revenue graphs. Look at that. That's nice. That looks good. Y'all remind me to switch my headphones out. I got the sun in my eyes again. IWM, Russell breaks out. That's bullish for AMC. Yeah, kind of. All right, so yeah, Peloton and Palantir are just a different story. Palantir now with AI hypes all the way back up to 16 plus. Peloton is still like a penny stock under $3. So I like Palantir, obviously. I don't like Peloton. Thoughts on PayPal? I'm in PayPal. My average price on PayPal is $51.46 is my average on PayPal. I've been in this one since, let me see how long I've been holding PayPal. October. So I bought PayPal in October when it was at these deep lows. Again, like, you got to understand my strategy is I'm a bottom feeding dip buyer. Like, I look for companies that I think are going to be fine, that either have a rush of negative pressure, like downward pressure, where I can pick them up at a discount and buy them up and sit, like PayPal. Or I buy like healthy blue chip companies that are not super inflated in price. So it's kind of what I tend to buy. Tyson Foods, another one of my holdings. We took half the profit off of it today. We had 51 average. It got up to almost 60 with good earnings for Tyson Foods. I'll be careful about some of these AI tech. We need to see 25-30% year-over-year growth from Palantir to see it shoot up after earnings. I think that's what analysts are wanting, for sure. Curtain blinds. Yeah, I got to get something in here, man. SYM. Symbotic. All right, let me take a look. I'll look at it for you. I don't know anything about this company, though. Symbotic. Go away, BLK advertisement. I mean, it doesn't look good for EPS. Like, margin-wise, it seems to be losing more and more money as time goes on. You know, just short-term margins at least. In terms of revenue for Symbotic, you know, the revenue looks good. You know, they just need to fix those margins. You know, revenue's been doing okay. Hasn't reported a lot. Pretty new since 2022. Looks like a young company, but yeah. I mean, they need to fix their margins. Their EPS is good. Revenue, not so much. Any thoughts on Mara right now? Mara is just going to move with Bitcoin as a mining company, mostly, in my opinion. You know, it's down today because Bitcoin and others are down. Palantir Tech options imply 14.3% move in share price post earnings. Yeah, I mean, that's big volatility. We'll see. It's at 17, roughly $17 right now. So we're talking like a $3 or $4 move. A $3 move. You know, so we'll see. I mean, it's at 1670s. I don't know if it's going to move, 14-15%, but it could. Supermicro Semiconductor, maybe another move earlier. Yeah, I mean, they've been going absolutely nuts right now. Supermicro up to 664s at its highs today. Still testing highs right now for Supermicro. So again, this is all just AI. Look at this graph, man. What a crazy graph. But again, look at the intraday movement. Up to almost 660s. Hit 660s for a little bit earlier, too. Good old Kramer. All right, we still got 15 minutes before Palantir numbers drop. I wish they did the earnings call a little bit earlier. We're going to stream it all live anyway, but still. Looking at our votes, 78% think they're going to beat, 22% think they're going to miss. %67% on Twitter think they're going to beat, 33% think they're going to miss. I'm long 500 shares. Hey, good luck. Hey, nice Fox. $10 pretty good price. Baba reports results soon. What do you think? When is Baba? Tomorrow, right? No. Tomorrow's Eli Lilly, Spotify, Hertz, Toyota, BP, Spirit. Thursday is Baba, right? Or no, Wednesday. I'm sorry. Wednesday is Baba. Yeah. Wednesday morning is Alibaba. We'll see. We got Uber as well, CVS, Roblox. Snapchat's tomorrow evening as well. And then Wednesday evening, we got PayPal, Disney, ARM. We're in ARM right now as well. ARM had a pretty good open. Didn't hold all of its gains, but it still did pretty solid. We're in Google. We've been holding Google for a while. It's doing nice. Hey, what's up, Zigzag? Blaze Mirror down 46% from its highs in December. Yeah, I mean, it's probably just because Bitcoin was starting to get a resurgence in price. Yeah, I mean, Mara once was at 155 in 2014 when crypto first got kind of hyped up. Back before utility companies recognized it and fixed their margins a little bit. But yeah, I mean, it's been going okay. I'm not somebody that necessarily likes investing in mining companies a lot, crypto mining, just because I think it's better to just buy the associated crypto directly instead of the mining company that's mining the crypto, right? So I'd rather buy Bitcoin, you know. Maybe you have better bang for your buck in that regard for like mining companies, but it's just not my style, I think. All right, so BLK and Fidelity now hold almost 135,000 Bitcoin, worth 5.7 billion for their spot ETFs. What you should do: look broke and stack your assets. What the majority of people do: look rich and stack liabilities. 100%, dude. I try to tell people not to buy brand new cars. Like, buying new cars, like financing new cars, worst decision you could ever make. Most of the time, right? Like, you could buy a used car that's a couple years old, have low miles, and you're going to be, like, people just want to look cool. Like, that's all it really is. But they lock themselves into long-term debt, and then they have a low net worth because of it. Do the Vision Pros from Apple have trading apps? That would be kind of cool. Apple selling the Vision Pro with 60% gross margins. We are selling to willing buyers at the current fair market price. Anybody ever seen the movie Margin Call knows what I'm saying. Powell yesterday said the U.S. is on an unsustainable path. The debt is growing faster than the economy. Powell says it's time to put a, interest into fiscal stability. All right, guys, we got about 230 people here. We still got 10 minutes until these numbers are out. What are your thoughts on AMC as far as a 3 to 5 year prediction? I mean, I don't know. It's tough to tell. I'm in AMC, and so there's certainly some confirmation bias going on in my head. Like, I want AMC to go up. I'm in it right now. I'm not in a huge position, but I am in it, and I want it to go up, of course. Right? That's number one. I'm in it. I hope it goes up. Now, looking at it, attempting to be objective about their future is a different thing. I think that movie theaters have changed. The business of movies has changed, and now I don't feel sorry for actors necessarily. Actors with their strikes saying, oh, boo-hoo, we don't get paid enough, we want royalties, can just be quiet. All right, like, oh, I'm sorry, you're only making $2 million for this movie for pretending to be somebody else. You know, now you want to make 10 million in royalties. Like, I don't feel sorry for actors at all. Like, they're absolutely, you know, they're wanting to make writers money without writing. You know, that's the problem. But I think the industry of movies has drastically changed. I think it's drastically changed. What you see now is you see most movies coming out very quickly on streaming services. And so the whole point of going to a movie was to see something that you couldn't see at home, right? Now direct to streaming movies are destroying the movie industry, and it all has to do with money. You know, I'm a big Game of Thrones guy. Like, I love the show Game of Thrones. My wife loves it. She watches it with me, right? Game of Thrones, it used to be a new season every year. They stopped doing that for shows, right? We like The Last of Us, great show. It's going to be years before another Last of Us comes out. We like 1933. You know, it's going to be years until another one comes out. The reason there's that big difference in industries, look at Supermicro breaking highs. The reason there's that big difference in industries now is that the movie companies want a sure thing. They want a sure thing before they sign on for the next season. Instead of just taking that bet and saying, hey, we're going to make this new season regardless of whether we're going to make as much money as possible from it because the consumers want that, they stopped doing that. Now they need 100% sure things with seasons. And so that's why now every time a new season comes out, it's taking years and years and years because they don't even start production on it until they get that green light. But the whole movie theater industry is changing, so it's impossible to know what's going to happen to companies like AMC because, again, I'm not saying they're obsolete, but their margins are certainly going to continue to go down as people start watching movies at home now. Now, the only thing that could change is if they start to lock in exclusive deals with movies where the movies are only showed at theaters, but that is becoming less and less common. Less and less common. It's much more common now for a movie to debut in theaters, and then very quickly afterwards, they're going to have streaming options where you're paying a premium for streaming. And so the industry is just changing. All right, guys. Hey, we got earnings dropping in about 7 minutes here. 7 minutes. And the sun is in my eyes, bro. I got it. Supermicro hit 670s right now, 670. Still waiting for Palantir's numbers. Yeah, I didn't see that, Matt. But again, I think movie theaters are an interesting sector of industry to watch because I think they're just changing. I still go to the movies. I like to take my wife on dates and stuff, and I think there's a lot of other people like that. But is it enough to sustain the entire industry? And I don't know. I don't know. Yeah, I'm in Palantir. AMC even has their own popcorn. They do. I didn't like the popcorn idea though. Popcorn doesn't seem to be the best margin product. So them acting like their new popcorn is going to save the company was just kind of a silly thing. I laughed at it at the time. Everybody got all behind it, like, ooh, AMC popcorn. But bro, like the margins can't be that good with popcorn. Like they need to think of something else. Like that seems like the smallest insignificant idea ever. I don't know who's making these decisions behind the company, but probably the same people that told him to do the special purpose divvy and that it was a great thing, and then months later told him to get rid of the special purpose divvy, that it was the worst thing, and then tanked the price, diluted the stock, and now the stock is at freaking 38 cent pre-split price. Yeah. All right, will PLTR. We got 5 minutes here, team. Will Palantir beat or miss? Beat or miss? Let me know in chat right now. You can vote in the poll, but also write it in the comments. Beat or miss? We'll see. Do you think there are too many bulls? I don't know. I think it's hyped up. AI's big. I think they could be showing some good margins, but it just depends. They've got a lot of volatility that could happen from this stock, so it'll be fun to watch. Beat. What do you think, beat or miss? I'm going to go with beat, but that might be confirmation bias. I want them to go up. I hope they beat. They make a good amount of their money through concessions, but it certainly isn't enough to cover 26. Yeah. All right, guys. Nvidia ahead of Palantir earnings is testing 695s. It's that 694.30s. Lifetime high is 694.97 for for Nvidia. So it's pushing up to towards 700, and you know, this is ahead of the earnings that are coming out today in less than 5 minutes. Nvidia shooting up right now, Supermicro shooting up. AI stocks are making a run. Look at Nvidia up here. It's getting close. It's at 694.90s here, 694.90s. So we got the timer here. We got 3.5 minutes. 10-cent EPS. Yeah, let me know what your EPS guess is. 8 cents is what's expected for Palantir. 8 cents is what's expected. So I'm gonna go with 11 cents and on 615 million. 11 cents EPS profit on 615. It's not forward looking. I have no idea what they're gonna show. This is just a pure guess. But I'm gonna go with 11-cent profit on 615 million. All right, guys. Hey, we got 3.5 minutes now. This time, the clock's a little bit early. Again, Nvidia testing 694s right around the highs of the day. Beat EPS of 10. Palantir beat already heading up before close. Further dilution, almost a certainty. Neutral. Marketer says pretty soon we'll all be. I mean, honestly, everything that you just said is already happening except for the wiping part. Everything else is already out there, bro. Nvidia 694s. All right, team. Palantir on the right side, it's at 1670s here, 1670s. We still got a couple minutes, bro. The sun is in my eyes. I'm trying to, there it is right there. I gotta block this. Did I fix it? All right, that's actually better. All right, so I think I fixed it. Is Nvidia reporting today? No, Nvidia's on the 22nd. 22nd. We got 2 minutes here, team. 2 minutes. Hey, what's up, Northwest? I'm betting on a miss. NXPI. Yeah, we're going to cover all the earnings that drop after the close. We're just going to stress Palantir. All right, guys. Hey, we got a minute and a half. Technically, Palantir numbers are scheduled to release at 4:05. Technically, right? So we don't know when they're going to drop. They're technically scheduled for 4:05. Palantir bulls. Hey, we'll see. I'm ready. All right, guys. Hey, we got 7 minutes, or we got a minute, about 1 minute left. This timer's a little bit early. You can see Palantir pulling back to 1672, right around the 200 EMA. Nvidia just got really close to the lifetime highs again, right around 695s. Nvidia pushing up, Supermicro pushing up, Tesla bouncing back a little bit. We'll see if we hold here, but yeah, we got less than a minute before the closing bell. Yeah, we'll cover all of them. Don't worry. We're going to cover all these. Chegg, Symbotic, Vertex, NXP, Semiconductors, Simon Property Group. Yeah, we'll cover all of them. All right, guys. Hey, 20 seconds. 20 seconds. This timer's a little bit early, but we still got 20 seconds until the closing bell. You can kind of see that reflected in the stock chart. All right, here we go. 15 seconds. 10 seconds. All right, guys, 5 seconds. Here's the closing bell. Remember, Palantir's technically scheduled to drop right at 4:05 p.m. Right at 4:05. You'll be able to see it reflected in the share price. So you'll be able to see it move with the share price. All right, so we can put Vertex, SYM, or something like that. VRTX, CHGG, Chegg. We're gonna keep an eye on these. Nothing out yet. We do have some upward movement though since the closing bell at 1680s here, team, for Palantir 1680s right now for chat. There for the chart. All right, team. All right, Palantir up to 1690s. I don't think it's the earnings yet, but still kind of sideways here. Again, technically, guys, we're scheduled for 4:05 p.m. So we still got a couple minutes left until they're technically scheduled to drop. But again, that doesn't really mean anything. There goes Palantir up to 1720s, 1730s, 1740s. Tap 1750 here. Palantir out. Quarterly adjusted share 8 cents. Estimate of 8 cents. Revenue of $608.4 million. So they came in pretty much flat for earnings that I see. Again, I think they're pretty much flat for earnings. Unless I'm pretty sure this is right. But again, 8 cents per share. I'm pretty sure they expected 8 cents. Quarterly revenue 608.4. I think that's right. Palantir up to 1702s right now. Let's see if it holds. Again, I think they're out, but this is only one source that I'm seeing. Let me check my other sources here for Palantir. Yeah, I don't see anything going on yet. So maybe they're not out yet. Maybe that's just something that fake out, like, or didn't actually report. Also, guys, I'm going to put it in sub-only mode. So if you haven't already, hit the subscribe button. We cover all the major earnings live here. I'm holding Palantir. Let's hope it goes up. We're at 1724s. Yeah, I don't see any other reports. So maybe we're not out yet. Palantir pretty flat in after hours. A lot of orders going through, but hasn't really moved much since then. We're at 1725, and I haven't seen any other. Okay, 8. Yeah, so actually this number is correct. 8 cent profit versus 8 cent estimate. Sales of 608 versus 603. So my initial was correct. So as expected for EPS. Better than expected margins. Their guidance numbers, quarter one revenue between 612 to 616. Quarter one adjusted income from operations of 196 to 200 million for guidance numbers for Palantir. Again, so I think guidance numbers are out. We'll put this number up on screen. Quarter one 24 revenue view of 612 to 616. They expected 617. So slight miss on revenue here, but they're still pushing up some on all this reports. So they're still pushing up some. Again, you can see the numbers there. EPS 8 cent, revenue of 608, quarter 1 24 revenue of 616. Vertex announces positive results from a pivotal trial of one of their bio drugs, next-in-class triple combination treatment for cystic fibrosis. We'll put this number up on chat too. I didn't really get faked out. I was actually really early with their earnings report. I just wanted to confirm that it was real first before I before I really said it was out. But yeah, we told you guys 8 cent profit, 616 or 608 million. Do we have in-phase today? Let me make sure. Let me see. No, in-phase is not today. I believe in-phase is tomorrow evening. Yeah, tomorrow evening in-phase. Palantir starting to dip here. And again, guys, we are going to stream the full earnings call. All right, now we're bouncing back up to 1740s here, team. Bouncing back up to 1740s. Again, we are going to stream the full call live at 5 p.m. AI Mania. All right, there goes Chegg. It looks like Chegg numbers are out. It's at 840s. We'll cover these numbers when they drop. But again, Palantir is still pretty flat. Maybe we're waiting for the earnings call. And remember, guys, if you haven't already, look at Palantir break highs. Palantir up to 1760. Chegg just reported and they just dumped down. So they're falling down pretty big. And again, if you haven't already, check out TopStep. TopStep is a funded program in futures where they give you a demo. You can day trade the index funds that you see in the stock market. If you try to do it in the stock market, you'd be restricted by the PDT rule. Futures, there's no PDT rule. You can day trade short, buy market, sell market, all that good stuff. No PDT rule. You can day trade essentially the SPY in what's called the E-mini, essentially the Q in what's called the NASDAQ 100. You know, you can directly trade those index funds in futures. There's no PDT rule. TopStep gives you a demo and they test your skill, and if you could pass the test, they fund you. Most day traders lose though, so it's really the best of both worlds where you can try to get started with a very small amount. If you lose, it's not the end of the world, but if you pass it, you get a 90% split, 50 to 150K in funding. The base one's only $49. It's a great test of skill, and if you lose, it's not the end of the world. It's the best of both worlds in my opinion. TopStep's the most legit one in the world. They are a sponsor, of course. I'm biased in their favor, but here's the link. Palantir breaking highs up there at 1610s. Or 1810s, guys, 1802s. Palantir running in after hours right now, up to 1810 on these earnings. Look at Palantir on the right side. Chegg also bounced all the way back. Symbotic just dropped earnings. They came in a little bit more positive than expected. They came in at a 2-cent loss versus a 5-cent loss expected. Revenue of 369 mil. Miss on revenue though. Here's Symbotic right there. I haven't seen NXPI yet. But again, Palantir breaking highs up to 1840s almost 1840s. Simon Property Group just reported numbers. We'll put these out on screen as well. Will Palantir break 20? Look, we're going to go ahead and do a poll right now. We're going to do this poll. All right, so again, the poll is going to be, will Palantir break 20 today for earnings? Yeah, will Palantir break 20 today? Let me know. 1840s right now, Palantir. Vertex, VRTX numbers are finally out. They posted 371 EPS versus 411, expected a miss on EPS. Pre-tax profit of 1.15 billion. They expected 1.32 billion. So better profit than expected. Revenue of 2.5 billion, 2.52. They expected 2.51. So a beat in revenue, a miss in EPS, and a beat on pre-tax profit for Vertex. We'll put these numbers up on screen. And again, we're going to stream the full earnings call live in about 50 minutes. So stick around. See what Palantir does in after hours. Up to 1630s right now, 1630s. Where's Nvidia? How are they reacting here? I see Chegg moving. Nvidia just broke lifetime highs. Now it's technically not it's not on paper until it's during market hours. So this is technically not the lifetime highs, but it's up to 396. So it's breaking previous lifetime highs, but it's technically not actually lifetime highs. But yeah. Palantir up to 1840s right now, guys. You love to see it. 1850 highs. Yeah, sorry, I keep saying 16, my bad. Digital, cry about it, bro. You'll be all right. I don't know, guys. I'm sorry. I'm trying. I'm covering it as fast as I can. All right, hey, Palantir just broke 1850s or 1840s. Right up to the highs at 1850. 1850 even is the new high for Palantir. Nvidia up to 696, 696.50. Palantir just broke 1850 high. It's up to 1863, 1864. So Palantir, rip it up this morning or this evening. Man, I'm all mixed up today. Palantir, love and life up to almost 1870s right now. 1874s, 1875s is the new lifetime high. $20. Hey, let's see. It's close. We're $1.24 away. $1.24 away. Now we're $1.19, $1.14, $1.12 away from $20. We're getting pretty close. Look at those math skills. All right, we're $1.11 away from lifetime highs. New not lifetime highs, I'm sorry. New highs. I'm sorry, from 20. Let's go Palantir 20. Will it break $20? Let me know in chat right now. I feel like a horse race announcer guy or like an auctioneer. Look at Nvidia right now, though. Nvidia's pumping almost up to 700. So Digital says, cry, I'm just laughing. I will laugh louder. So let me get this straight, Digital, just so I can put this into perspective, right? You're bearish on Palantir. And Palantir had an EPS and earnings beat and is gapping up a decent percentage. And you're laughing because you were wrong, you know? No, it's all good. I'm just kind of trolling you a little bit. It's all good, dude. Yeah, look, $19 is the new high of after hours. Look at Nvidia, all the way up at over 697s at one point. Finally pulling back a little bit. Is it too late to buy Nvidia? I don't know. I think AI's up there. I think if you're going to buy AI stocks, and again, I'm going to preface this with I don't know. I don't know what you should do. All right, I'm certainly not an investment professional. Remember, guys, remember, I am terrible at this stuff and have no idea what I'm talking about. All right. But if I'm gonna get exposure to AI, it's gonna be in some of the smaller cap AI stocks that are less up there, less extended. All right, so we're consolidating for Palantir right around the highs though of after hours. Yeah, NXPI pushing up. They had earnings today as well. NXPI giving back all the gains. These are biotech stocks, super volatile. Yeah, disclaimer alert. Remember, guys, listen. I am terrible at this stuff. Have no idea what I'm talking about. It might be wildly wrong about anything and everything I say. Do not copy me. Not an investment professional. Yeah, Nvidia's just up so much. QCOM, yeah, QCOM's interesting. They dropped earnings a few days ago. Hit 158. All right, so Palantir consolidating. Put a couple red candles in, but it's not the biggest ones. Yeah, NXPI is a pharmacy company, I'm pretty sure. Or no, maybe that's Vertex. VRTX is a pharmacy company, I'm sorry. Or is not a pharmacy company, a biotech company. This is the first time I've noticed that disclaimer you put up. Man, look at NXPI dump. I don't know anything about NXPI. It's not my... Oh, it's a semiconductor company. Okay, gotcha. Yeah, I don't know this company like that. I know Palantir, and I'm in Palantir. I'm not in NXP Semiconductors or whatever. It posted 371, expected 365, 3.42 billion in revenue, expected 3.39. So it beat on EPS and revenue. Microchip, MCHP, is going to reduce its salary of the CEO and executive staff members by 20%. Yeah, Palantir edging closer to the high of after hours right now at $19 even. It's edging closer. It's trying to get there. It's at $18.90. And again, we're going to stream the full earnings call live for Palantir today. So stick around. All right, so Palantir up to 1897s, 1 cent away from highs of after hours. All right, guys. Hey. You guys ready? Palantir just broke highs up to 1913s now. 1913s. They are now 85 cents away from $20. Vote on the poll right now. Palantir, love and life, breaking highs. Looks good. Yes, 19. Yeah, I'm in Palantir as well. I'm up on this one too, so you love to see it. All right, guys, Palantir up to 1912s. 1915 is the new, I keep saying lifetime high, so forgive me if I keep saying it. But it's heading higher here. Let's put a timer up. We have a couple minutes until the earnings call. We're going to stream. 1915's just tapped, so it just tapped the high of after hours. 1910s, 1912s. It's tapped it again. There it goes. It broke it again. 1922 right now. 1922 in price. All right, we got 76 cents away from $20. 76 cents. Vote on the poll right now. Let me know how you feel. We got hundreds of votes already. 66% say yes, it will break $20 today. Up to 1925 now. 74 cents, 73 cents away from $20. Where's it going to close after the earnings call? We got 73 cents away from $20. Yeah, this thing's moving. Hasn't really slowed down either. I don't want to jinx it, but it hasn't really slowed down either. Nvidia's been ripping up too. Nvidia up to almost 698s. What about Supermicro? Supermicro hasn't really moved as much. What about AMD? AMD's not really moving. MU, no. Palantir testing that high level again. Look at it, it's right there again. The range has started to pick up because it's moved so much as well in after hours. It's testing it. Again, the earnings call is going to be in 40 minutes, guys. We're going to stream the entire thing live, so don't go anywhere. You can listen to the full earnings call live right here. So we're starting to finally getting a red candle here. We're back up to 1920s. Here, 1920s. 1925s. 1927s. We hit 1926 again. We're kind of testing this top up here, though. Vertex pretty volatile, too. Chegg down. Alright, so there's another small little rejection. Finally in the green. Hey, congrats. Yeah, we'll see. Will it pump tomorrow? Just wait until all the new price targets come out. I hope SoFi can be this much fun. Yeah, SoFi. I mean, this is from earnings, though. SoFi earnings are done. They were a couple days ago. We streamed them as well, but... Hey, nice Dragos. Palantir earnings is better than Q3, so stock price should be higher than $21.85 per share. Nvidia keeps breaking highs. Do you think the price will go higher after earnings? I'm not sure. I hope so. I really don't know for sure, though. Of course, nobody does. We can only hope. But yeah, Eli Lilly drops earnings tomorrow. There's a decent pullback to 19 here, guys. So just to put it out relative to what it's done, the pullback is still pretty small, all things considered. But yeah, so tomorrow morning we've got Eli Lilly, Spotify, Pfizer, Hertz, Toyota, BP, Spirit Airlines, a bunch of other companies too. I don't think we have any economic data though tomorrow. Let me just make sure. Tomorrow we got a bunch of Fed speakers, but that's it. Same thing for Wednesday, is pretty light. All right, we're at 1890s here, team. 1890s. If you look at Palantir past beats, they run for a good week after momentum usually holds up. I hope so. Can we get the squeeze of all time? I hope so. Lilly's going to shoot through the roof. I just didn't have the... Yeah, Eli Lilly expecting tomorrow $2.46 a share on $8.9 billion in revenue. All right, so Palantir testing 19. You know, opened up the day, or opened up earnings at 1650s. You know, so Palantir up, what, like 10% right now after hours? Was up around 10%, a little bit less, but... Oh, it's up over 10%. I'm sorry. It's up like 15%. At the highs, it was at 15%. Right now, it's like 10. But still, it's moving a little bit. We got a nice little pullback. You can see the longer-term chart on the left side. Plug Power. I don't like Plug as much. I don't know enough about Plug as a company to really say yes or no. It looks like a penny stock now. Lost a lot of hype. Yeah, so Palantir guidance numbers came out as follows. They see fiscal year revenue at 2.65 to 2.67. We're going to put the guidance numbers up. So this is Palantir guidance numbers. They see fiscal year U.S. COLMM COML revenue in excess of $640 million. Get the rest of the guidance for you. I'm assuming they mean commercial revenue. A fiscal year adjusted income from ops of 834 to 850 million. All right, so that's their guidance numbers. Revenue beat, EPS in line, GAAP profitability ahead. So it's his fifth consecutive quarter of GAAP profitability. If you don't know what GAAP stands for, it's generally accepted accounting principles. So yes, it's fifth consecutive quarter of GAAP profitability. Hey, thanks, Northwest. All right, guys. Hey, we got 30 minutes or so until the numbers come out. We're going to be playing the full earnings call live as well. Again, if you haven't already, also, guys, hit that subscribe button. We day trade, swing trade, invest, stream all the big earnings reports, Powell conferences, meetings, FOMC, all that good stuff live every day. All right, so Palantir back up to $19 a share. All right, so we're up to $19 again. Testing that level now. Nvidia is dipping down, though. Nvidia just dropped all the way down to 692s in after hours. 692s. All right, team. Still consolidating a little bit, but that's normal. Again, Palantir fourth quarter tech government revenue was at 324 million. They expected 334 million. Commercial revenue was at 284. They expected 268. So they had higher than expected commercial revenue, lower than expected government revenue. So that's what we see in now. Is again higher than expected commercial revenue, lower than expected government revenue. Still consolidating, holding its gains pretty well. Like for a company that's up 15%, it's holding its gains fairly well. I'm catching back up on chat right now. Yeah, Alex Karp is the CEO. Yeah, I'm in Palantir. Yeah, but I mean, again, you have to think about it in terms of this is a startup, right? Like again, if we look at their EPS graph. You know, if we look at their EPS graph, this is the lens you have to look at it under. Like, you have to look at it as a company that is trying to be profitable, right? It's not easy to be profitable for a company like this. It's not easy. So, again, you can see back in 2020, they started out here. They're slowly starting to turn. They have had 4 consecutively profitable quarters, including this last one would make 5. So it's their 5th consecutive profitable quarter, which is what they want. Their revenue is also trending better as well. Like if we look at their revenue, let me make sure I have this. Yeah, so if we look at their revenue is pretty solid for a company. I'm pretty sure this is, let me make sure. Yeah, so here's their revenue. All right, so their revenue is getting better. It's slowly increasing. And so they're up to almost 19 a share. So I like this trend. I think this trend is nice. But you got to understand, like, they're working towards it. They're a young company. Government payments are lumpy. That's good, though, because social adoption was a worry. The government is going to continue to back them, but private corps beating sales revenue is a great sign. Yeah, for sure. Carp speak. Yeah, I mean, again, the CEO speaking should help if you know, hopefully he does. Sometimes they don't let him, but all right, guys. So, Palantir up to over 19. Over 19. At least the sun's not in my eyes anymore. All right, so up to 1903, kind of slowly increasing. Kind of looks like a bull flag. We're seeing other data come out. Fiscal year revenue guidance was at 2.65 to 2.67. We're going to put this up on screen. Fiscal year U.S. commercial revenue in excess of 640 million. Yeah, somebody said Alex Karp is a weird guy like Elon, but genius. Yeah, I mean, I think sometimes there's a positive correlation between neuroticism and intelligence. You know, I think sometimes the really smart people are kind of crazy. And I mean, I think that's kind of standard. They say Einstein was crazy, right? I'm not really comparing either of those CEOs to Einstein, but they say Einstein was crazy. And so sometimes, you know, the smarter you are, the less socially skilled you are, I think. So, yeah. Hopefully he doesn't cry. Are we selling? Has anyone ever used Palantir commercial software? No, I mean, I haven't, but their businesses mostly. Eccentric is the word. Yeah, that's what I meant to say. Wall Street already pumping. Yeah, I mean, AI hype is in full swing. Again, Palantir at 1610s just now, tapping 1610. 1627, again, is the new lifetime high, so we're getting close. All right, guys. So, hey, let me test this out. We got Palantir pretty close to the highs of after hours. Pretty close at 1916 right now. 1927. So we are about 11 cents away from the highs of after hours. Slowly and methodically pushing up. $19.09. It's trying. All right, so Palantir sees 2024 quarter one revenue 612 to 616. They expected 617. So we're putting this up on screen. We've already seen this. Hey, thanks for streaming. No worries, financial. All good, bro. All right, and we only have 20-something minutes left until this data comes out. So. All right, at 1901, so 19 whole dollar might be big. We'll see. So we're at 1903. All right, we're at 19 again. 19 here. Nvidia started to push up. It's at 694.50s here. 694.50s. So back up to 1911s here. We're at 1907s. Look at Meta. What's Meta doing? Meta's not really moving at all. Palantir's holding its gains really nicely, though. Again, it's at 1906. Tomorrow is going to be when it's going to jump. We'll see. We'll be streaming live at the opening bell tomorrow morning. So we'll see. It's up to 1910s now, though, holding. I'm pretty okay in trading stocks, not much with futures. Yeah, I mean, it depends. Like, day trading's, most people aren't going to be good at day trading. Futures trading, you can take some swing trades in futures that are really effective. Like you could trade oil, natty gas, NASDAQ, Dow, Russell, some currencies. And so there's a lot of cool, or you could just day trade. But again, most day traders lose money. And again, with that said, though, guys, one of my sponsors is a company called TopStep. They are a funded program in futures in which they give you a demo and they test your skill. And if you can pass the test, they fund you. If you don't pass the test, again, you're probably going to lose more trying to day trade yourself. Like when I first got started day trading, I lost thousands and thousands of dollars. Again, I tell the story a lot, but I had a used book business at the time. If you look at like my walls here, like you see a lot of these books came from that used book business that I had back in the day. It's a long story, but I had this used book business, and I went and saw the movie The Big Short and watched the movie The Big Short, and I was always a poker player and stuff like that, so I wanted to learn how to trade the markets, right? So I came home, and what do I find? I find freaking Tim Sykes, Warrior Trading, all this, financial freedom, warrior, millionaire students just buy my trading course. And again, I'm not critical of anybody here. Like, they can live their life. I'm not attacking them. All right, but I come home and I try to day trade, and I put up $4,000 at the time that I had from running this big book business. I made thousands of dollars a month, and I lost that money within 3 weeks, which was a lot of money to me at the time. I'm not saying 4K again; it's not a lot of money, but at the time it was a crap load of money to me. And so I lost it very quickly. And so again, the overarching point is that most day traders lose. If you think you're going to be some super secret outlier or some outlier that's going to be some super savant prodigy day trader, if you just buy the right course or service, I'm here to tell you, you're probably not. That's delusions of grandeur in your head. You're almost certainly going to lose money day trading in the beginning. You can get good at it, but it takes a long time, and most day traders lose. And so again, you can either put up thousands trying to day trade stocks and probably lose it, or you can put up TopStep's combines $49. Again, you're probably going to lose either way. It's a lot cheaper to lose TopStep. There's no PDT rule in futures, so you can actually day trade freely, learn how to day trade freely. You can trade essentially the SPY, essentially the Q, and what's called the E-mini NASDAQ. You can trade gold, all that good stuff. No PDT restrictions, right? They're a sponsor of mine, though, so of course I'm biased in their favor because they pay me money. But if you want to check it out, again, a great way to help support the channel, here's the link. Did I say 16 again, bro? I'm sorry. It's 1907s. Does a prodigy exist? I mean, it does, but if you think you're going to be that guy, you're probably not. Again, I get it. I got started day trading, and I was like, man, I'm going to get started. I'm going to prove everybody wrong. And I think it gets people who are not at the best place in life, like people who are struggling. Maybe you're struggling financially. I'm here to tell you, putting up thousands of dollars of your own money day trading the markets, if you're struggling financially, is the worst decision you could ever make. All right, do not do that. You can try a funded account program. If you lose, it's not the end of the world. If you're good enough to pass it, you get 50 to 150K in funding. If you're not good enough to pass it, which is going to be most people, you're only going to lose what you pay for it. You're still going to learn how to trade under pressure. It's basically, it's very similar to the same thing. There's just less risk, right? That's the overarching point. And so, yes, I'm biased, but I genuinely think it's good, because if traders don't try that, they're going to put up $2,000, $3,000 of their own money trying to day trade futures or stocks and probably lose it. So be smart. Yeah, the problem nowadays is in trading. You got all these 16-year-olds with braces trying to act like experts, and it's like, dude, they don't have enough time to be experts. If you think some 16-year-old is somehow some super secret stock market expert, again, they're just selling you a dream. I'm not saying they're not out there, but it's good in that regard to be skeptical. All right, so Nvidia at 695s. We got this bull flag. I do think this looks like a bull flag pattern. I think if we put a 5-minute chart up here, this looks like a bull flag pattern. We can draw it out really quick, a bad drawing. We have a bull flag here, I think, right? So I like the technical pattern. It doesn't mean it's going to go up. I know a 20-year-old kid that literally just started trading, and a month later he made a course. Yeah, I mean, I had a guy that used to be like a member of my community, but I don't think he really understood what my channel's about. Like, I get people that try to join my community a lot. This is actually way more common than you might think it is, right? I get people that join my community, and they want to be like mods and helpers and stuff like that, but they don't recognize that I'm very anti-guru, right? So they join my community. And then I remember I had one guy, he joined and he was like, yeah, thanks so much. I just started this 3 months ago. You've helped me so much. Thank you so much. Right. And I'm like, okay, yeah, no problem. And then he started to become like a regular posting in my Discord. And I can't really pay attention to the Discord all the time because I got like a wife and kids and a family and other life outside of my computer. And so before you know it, within like 3 to 4 months, this guy had gone from being like, hey, this is my first couple weeks trading, thanks so much, you're helping me, to I've been in the market for 20 years, I'm making 10% a day trading stocks, I am now a market expert. And when I was like, hey dude, no you're not, he got weird with me, he got mad at me for it. And I'm just like, look dude, that's not what we're about. I can't let you push that to my following. Like, that's just not what we're about. And so again, it happens very quickly. The Dunning-Kruger effect lives very deeply in trading, I think, because everybody wants to be an expert. I think it's an area in which you can gamble, and instead of people calling you a degenerate, instead they say you're a genius. You have a good trade in the market, people are going to be like, oh wow, you must have been really smart to make that trade. You put 20K in roulette and win, people are still going to look at you like a degenerate gambler. So I think it's one of those areas that it hides gamblers. A lot of people are really just gambling. If they weren't here, they'd be putting it all on red, But again, I'm not, sometimes the truth hurts. I'm not trying to attack anybody here, I play poker. I love poker. I'm a big poker player. But as long as you're honest about it, I think that's the key. No, I didn't put a 1-minute chart up. I put a 5-minute chart up. I mean, it's not the best looking bull flag, but we got a poll and we got some consolidation afterwards. So call it what you want. Look, we're almost up to 1920 here. So we're getting pretty close to the after hours high. Oh, they're the worst, bro. They're the worst, man. And it's funny because I'm in a space in which I have to. And again, I'm not even claiming to be a good day trader or anything like that. Anybody that watches my channel knows I would rather be real and honest and not pretend to be some super great day trader. Like, I talk about day trading strategy and theory or whatever. I always preface it always with, I can't guarantee this is going to work. Test it yourself. But it really is a sector of the internet in which people just embellish, I guess is the best word for it. All right, guys. Hey, we got 14 and a half minutes. All right, look, we're pushing up to almost the highs of after hours. 1927, we're up to 1925. So it looks like we're going to break highs again. We're getting close at least. Let's see if we do for Palantir here. All right, so we just broke highs again. There's 1930. So we're at 1930s. And again, I'm going to say all that stuff I just said with also the understanding that there really are people that really do day trade successfully and can make a bunch of money and are really talented, good traders. All right. That's just not my style. Like, I don't want to claim to be that. I would rather not claim to be that and not have to worry about losing 3 or 4 days in a row and then having my community turn on me like, hey, this dude's supposed to be an expert. What happened? Palantir, I'd rather surprise people instead of acting like that. All right, guys, we're at 1935s right now. 1935s. We are 65 cents away from $20. Again, vote on the poll right now. We got the poll live. Poll is asking people, will Palantir break $20 today? 68% say yes. 32% say no. All right, almost 1941s right now, team. So 1941s, we're getting there. Will we break 20? We're getting pretty close. Vote on the poll. All right, we're up to 1941, almost to 1950. I think 1950, there's 1944s, just broke highs again. I think 1950 is going to be like a big psychological resistance here. I hope not, but I think it could be. We're basically right at that level now. Half and whole dollar levels technically seem to have some influence over price. And so, again, we're right under that 1950 level now. There's 1948s. No, I'm not on that. The only other platform I've tried to build up. All right, we just broke highs again. 1954s. Churning up here for Palantir. You'll love to see it. This is headed to $24 and then high level 50. It's going to go past 50 if you see that Nvidia done. This is way behind, although they have 2 billion shares. It's going to easily, hey, I hope so. Export better BJ player won over 100K 5 years. Just started trading. Yeah, just take it slow, brother. Doesn't matter how good you are. There's levels to this and it takes time. You know, take it slow. 1950s right now for Palantir. So again, let's see if that holds support at 1950s. We have almost 10 minutes left, a little bit over 10 minutes. I'm good, Mac, you know. I don't know. It's gonna be too hard to gain followers on those other platforms. All right, team. All right, we're at 1945. So again, we're now under 1950. Nvidia's still trying to push up. We have 10 minutes exactly left. 10 minutes exactly left. See, everybody reaches out to me, bro. I don't know how many people I get reaching out to me wanting to help me create courses. And it's like, I'm not going to sell a course, you know? And if I did sell a course, I'm not going to split the money with some random internet dude that gives me the bright. You think I've never thought about selling courses before? I don't know how many emails I get like, hey, dude, you could sell courses. Just split 15% with me, you know, and it'll be a great idea. It's like, dude, you think I've never thought about that before? You think I'm going to share 15% of that money with you? Just some random dude that told me, hey, sell a course. Nah. Palantir at 1950s. Let's see if it holds over that $0.50 level. Yeah. I think after earnings it'll break. Where's Palantir? What price point is Palantir going to be after earnings? Team, let me know. Well, what price is Palantir going to be at after the earnings call? $21.80, $24.50, $20. Can you explain more about how TopStep works? So TopStep gives you a demo account, and they test your skill. If you can pass the test, base one, you got to make $3K without losing $2K in profit on a demo account. If you could pass that, and there's a bunch of rules you got to follow. So if you could pass that, they fund you $50K with a 90% split. And there's multiple different times. There's express funded accounts, and then there's actual funded accounts, and there's a lot of different stuff. But either way, I think as long as you have reasonable expectations for it, it's good for traders. And they're a sponsor of mine, so of course I always tell people like I'm biased because they pay me money, right? But I genuinely think it's good for traders because most day traders lose. So you can either put up 5K trying to look cool and probably lose a large portion of that in day trading in the beginning as a new trader, or you could put up $49 on TopStep, $150 if you want the big account, and if you lose, you're out $49. You know, you're still going to have some pressure. You're still going to have to learn how to trade under pressure. You're still going to have to trade and pass and learn and do well. But there's just noticeably less risk in that situation. Noticeably less risk. So. No, if you lose, they're going to give you a max loss. You know, they're going to give you conditions once you're funded, which is what all of them do. But I still think it makes perfect sense. And so, you know, if you hit the max loss, you just go back and you can start over if you want. Again, if you want to check it out, here's my affiliate link. But again, also, remember guys, like I always put this link up. Remember, I am terrible at this stuff. I have no idea what I'm talking about. Nvidia pushing up right now. It's at 695, almost 696. Again, Palantir definitely has a chance to break 20. Today definitely has a chance to break 20. It's at 1950s. It needs 57 cents right now to break. Roughly 50 cents to break to hit $20. I think it certainly has a chance. Whether it's open to Canada, I'm not sure. Shane, I would reach out to them. You can use the link above, but I'm not sure if it's open to them or not. Yeah, I'm trying to look at it. I usually cover all the Powell interviews and conferences. I'm looking for the semi-annual monetary policy report to Congress. Usually it drops twice a year. I mean, as the name would suggest. I'm trying to see when it is for 2024. But they don't state when it's going to be. Trying to see when they scheduled it. Last one was June 16th of last year. Ooh, wait. Is the next one on February 9th? At 2 p.m.? That would mean it's this Friday. Let me see. All right, guys. Hey, we got 5 minutes here, team. 5 minutes. Hit that subscribe button. Hit the notification bell. I appreciate it. We're pushing up towards those highs of the day right now. And again, remember, I have no idea what I'm talking about. I don't sell a course. Don't sell a service. Don't claim to be experts. Don't act like a guru. I don't charge money for any of my content. It's all free. We do have sponsors, of course. If you want to check them out, link is in the description. But yeah, I appreciate it. Hit the sub button. Hit the notification bell. All right, so we're up to 1950s. Oh yeah, let me get my headphones in. All right. Y'all let me know if y'all can hear the music. Not yet. Hold on one second. Let me know if you can hear the music now. Bro, the internet constantly calls everything a scam. 6, 7. Alright, so here's Friday. Unless they're gonna update this, I see. All right, so it's saying the monetary policy pro is Friday, February 9th at 2 p.m. Let me see this. Is it really? All right. No, I don't see anything. All right, guys, 5 p.m. We are ready and waiting. Can y'all hear the music? Yes? Okay, good. Wait, that's not the right one. Wait, why is it showing me this old web? Okay, hold on. Is Palantir not? Okay, wait. Hold on, team. All right, guys, bear with me. All right, so we're going to get the Palantir earnings call live, team, so bear with me. We're still waiting for them to start the call. It should be any time now. Still waiting. They haven't started the call yet. All right, call should be any time now. All right. All right, so we're gonna mute this and then mute the music to make sure. All right, so y'all could hear the music just now, though, correct? Just want to make sure. All right, so we're just waiting. Make sure. Yes, okay, good. We turned the music off, but yeah, so again, we're waiting for the call to start. We are waiting on hold. What's weird, they don't have any hold music. That's odd. Waiting for them to start now. You would think like they would have good hold music, right? There it is.
Team, and I'd like to welcome you to our fourth quarter
Sound
2023 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release, distributed after the market closed today, and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and SEC filings are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
2023 was a tremendous year of opportunity and growth for our company, with U.S. commercial at the forefront, which was meaningfully driven by AIP as the product and boot camps as the go-to-market motion. We closed out the year with $608 million in fourth quarter revenue, representing 20% year-over-year and 9% sequential growth. Our commercial business surpassed $1 billion in revenue over the last 12 months, a noteworthy milestone. And our fourth quarter commercial revenue grew 32% year-over-year. AIP and boot camps are accelerating our business, particularly in U.S. commercial, where fourth quarter revenue grew 70% year-over-year, evidencing a significantly expanding addressable market. In October, we set a goal of executing 500 AIP boot camps within 1 year. We have already blown that goal out of the water, having completed more than 560 boot camps across 465 organizations to date. We are deploying AIP to implement hundreds of real, tangible use cases in production for our customers. One bootcamp attendee remarked, quote, "What your team did in just 2 days was incredible. We can already think of 100 use cases for this." While another said, quote, "It seems there are endless solutions. It seems there's nothing Palantir cannot do." When combining LLMs with Foundry through AIP, the ability to deploy use cases becomes much more widely accessible, so the addressable market expands considerably. We're seeing initial momentum as a result of that expansion, while also still being at the starting line in the journey to capture that market. In our U.S. commercial business, the expanding addressable market driven by AIP is propelling growth both through new customer acquisitions and expansions with existing customers. I've never before seen the level of customer enthusiasm and demand that we are currently seeing from AIP in U.S. commercial. With regard to new customer acquisition, the expanding addressable market is reflected in the greater scale of the top of our sales funnel. And now we're doubling down on how we're converting boot camps to enterprise deals. We're already seeing evidence of boot camps helping to significantly compress sales cycles and accelerate the rate of new customer acquisition, which rose to 22% sequentially for U.S. commercial in Q4 versus 12% and 4% in Q3 and Q2, respectively. And we more than doubled the number of U.S. commercial deals with TCV of $1 million or more from the fourth quarter in 2022 to 2023. We're also seeing a meaningful increase in our U.S. commercial TCV on a dollar-weighted duration basis, which is up 107% year-over-year and 42% sequentially. We signed a multitude of U.S. commercial deals last quarter. Just to name a few, we signed deals over $25 million each with one of the largest car rental companies, one of the largest telecommunication companies, and one of the largest pharmaceutical and biotechnology corporations in the world. And then we also signed deals over $10 million each with an American consumer packaged goods holding company, an American automotive seat and electrical systems manufacturer, a comprehensive health network in the Midwest, and a large-scale battery manufacturer. In addition, we signed deals over $5 million each with an American bank holding company, a horse racing regulatory organization, one of the world's largest equipment rental companies, and one of the largest independent nonprofit cooperatives in the quick service restaurant industry. And these are just a few of the examples. Out of these deals, we're seeing several archetypes emerge as a result of AIP. First is the new customer who attends a bootcamp and signs an enterprise contract shortly after. For instance, an American cable television provider signed a nearly $3 million deal following cold outreach on LinkedIn that led to a 5-day bootcamp, then an enterprise agreement, all in the span of last quarter. Then there's AIP-driven conversions of ongoing pilots. Following a 2-year prospecting effort, a large American consumer packaged goods holding company agreed to a pilot, during which AIP was also introduced, then converted in December to a 5-year, $19 million contract. Then also, there's AIP-driven expansions in key existing accounts, including one of the world's largest telecommunication companies, where we demonstrated speed to value at bootcamps by delivering new use cases on top of the existing ontology in as little as 24 hours, with the results contributing to an agreement for a multi-million-dollar expansion of our existing contract. Within our international commercial business, AIP is solidifying our long-standing partnerships with existing customers, particularly in continental Europe, while also driving pockets of growth in select markets. This includes the renewal of our long-standing partnership with Novartis, a 5-year renewal with one of the largest European vehicle manufacturers, and a 5-year renewal of our partnership with Swiss Re. In addition to bootcamps, we are deepening distribution channels to more rapidly seize opportunities in certain regions, including Japan. In Q4, we expanded and extended our partnership with Fujitsu to enable them to bring AIP and data integration capabilities to their global client base. We also signed an expansion with Sampo Care to enable delivery of their real data platform to nursing homes and elder care facilities. Both of these reflected a culmination of months-long efforts prior to deal closing. In our government business, we are actively engaged across all theaters of crisis and conflict. The strength of our U.S. government business is not reflected in the fourth quarter results, which remain muted. Some of this is due to the continuing resolution and timing of large potential contract awards. But it's also a function of the department's pace of scaling their AI and software efforts to match the realities of modern combat, particularly with JADC2. The department is responding to great power competition by ramping up investments in America's unique strength, software. We are focused on deploying on the battlefield and in large programs related to JADC2, combined with our rollout of Mission Manager and the First Breakfast initiatives, which is driving innovation in our engagement model with the government and the defense industrial base. The Army has publicly indicated they anticipate down selection to a single vendor for the next phase of Titan to occur in Q2 of 2024. We also announced the extension of our partnership with the Army to continue operating and enhancing the Army Vantage platform, which is used for data-driven operations and decision-making. We will continue to onboard partners and demonstrate the value of Mission Manager during this option year to deliver on the Army's multi-vendor ecosystem vision. On the strength of our work on the ground and our software that actually works, we expect re-acceleration of our U.S. government business in 2024. Conventional wisdom is that government acquisitions are slow, and that you need to invest in the programs that the government is buying in a 2 to 3 year acquisition cycle. And that's what programs like CD1, AIDP, Vantage, and Titan look like. But our business has also been driven by urgent acquisitions to meet emergent needs that we predicted and invested in years ahead of time. As the U.S. confronts conflict in 3 theaters, and as all services seek rapid capabilities to meet those moments, we see substantial opportunity across the department. Turning to our international government business, we are incredibly honored that the NHS chose Palantir to help deliver a federated data platform, awarding us a consumption-based contract with £330 million allocated to improve patient care by bringing together the information needed to plan and deliver care while reducing administrative burden. Over the past few years, an increasing number of NHS trusts have used the software to reduce the care backlog. For example, at Chelsea and Westminster NHS Foundation Trust, it helped bring down the inpatient waiting list by 28% and operations canceled on the day due to missed preoperative assessments subsequently fell by half. In the fourth quarter, we also received funding from a partner nation related to our ongoing efforts in Eastern Europe, which had a substantial impact on our international government results. Recent world events and global conflicts illustrate the utmost importance of Palantir's mission. It's our duty to uphold our founding principles through our continued dedication to our allies in the midst of current events. We don't take this lightly. Last month, we held our board meeting in Tel Aviv, where I saw firsthand our commitment to and support for Israel. While there, we were proud to announce our strategic partnership to supply the Israeli Defense Ministry with technology to aid in addressing the current situation in Israel. My experience there was a humbling reminder of the role we play and the responsibility that we hold. Reflecting on 2023, we feel immense pride in the missions we are supporting and in our role shepherding our customers through the ongoing transformation of their enterprises with AIP. This ongoing transformation isn't just limited to our customers. I'm proud of the incredible transformation of our enterprise in 2023, and I'm excited about what it will bring in 2024 as we conquer the expanding market. I'll now turn it over to Sham.
Thanks, Ryan. As Ryan mentioned, the expanding addressable market driven by AIP is propelling growth both through new customer acquisitions and expansions with existing customers. We continue to focus on accelerating the rate of boot camps with current and prospective customers. From customer feedback, the AI platform meets this moment like none other. AI has radically recalibrated customer expectations for software, expectations that AIP and Foundry exceed by enabling the elegant integration of humans, software, and AI to deliver operational outcomes quickly. We are focused on the end-to-end problem of value creation, not a small, narrow technical slice. Accordingly, our platforms focus on tools, not tuning, on transforming business processes, not seeking iotas of insight. AIP is the AI-powered operating system for the enterprise, not a Q&A bot, not an agent framework, not a way to dabble, but a way to deliver. At a recent 2-day bootcamp with a construction and engineering and architecture company, our customer developed a production-ready use case that provided $10 million of savings. They used AIP to build an AI-powered disruption manager application that processes production disruption notifications through AIP logic to determine what the best new production plan would be. AIP, wielding a linear optimizer as a tool and using LLMs to parameterize and contextualize the disruption, translates the notification to a clear understanding of impact on the optimized schedule. AIP Logic and AIP Automate then rerun the optimizer to generate opportunities to respond to the disruption. 2 days, $10 million. We have covered nearly 200 use cases coming out of all these boot camps, and we are just getting started. The core theory of value that has driven our product strategy for time eternal is data integration. That bringing new data into an operationally relevant context to expand the complexity, nuance, and surface area of decision-making always produces value. AIP enables us to integrate so many types of new data: video conferences, incident response calls, Slack rooms, PDFs, images, video, audio, and exploit them through the power of LLMs and ontology. So much of what data defines a process is not actually in the system that runs that process, but instead in conversations, conference calls, videos of the factory floor, or images of a site. What's in the enterprise process system is a lossy, latent representation of this reality. Our software always exploited that phenomenon, that the truth is out there, not in your ERP system or that blessed application. With AIP, we are investing in multimodal approaches to compound on this proven value driver and expand the addressable market of use cases within the enterprise. As I've said before, with AI and LLMs, you can't think your way through it. You have to get your hands dirty and work in anger to get use cases into production. In AIP, we have built a platform to deliver proof, not just proofs of concept, to our customers. And boot camps are the way to flex that strength. At AIPCon 3, we'll have many customers on stage showing you their great work. Come taste the pudding. Turning to government, Palantir is experiencing its own Amazon.com to AWS moment. taking exquisite first-party technology that supports the largest scale defense tech player and making it available for third parties to build on and with. Gotham, Gaia, Meta Constellation, this is our software. Less well understood and now being commercialized is our software infrastructure. Platforms like Apollo, the capabilities that we had to build over 20 years to enable hundreds of dev teams to independently release 2,500 products and services to nearly 1,000 customer environments, including about 100 air-gapped environments, delivering 90,000 upgrades a week. This infrastructure abstracts away supply chain security, environment heterogeneity, and infrastructure so that developers can be operationally responsible for their services across it all, so they can focus on delivering innovation to the warfighter. And that's exactly why the Palantir Government Web Services offering is so compelling. $100 billion has been invested by venture capitalists into defense tech since 2021. These companies want to compete on quality, not beating back bureaucracy. Government Web Services creates a capital and time-efficient way to unlock market access for new entrants and incumbents alike. But even beyond defense tech companies, an extended set of these capabilities that we call Mission Manager are uniquely suited to delivering the capabilities that we have heard all government PMs asking for. Program offices want to pursue multi-vendor, Big Tent ecosystem acquisition strategies with government-owned and managed interfaces. The typical way to pursue this is with a systems integrator, where they are managing the integration with billable hours, constrained by humans. At Palantir, we do this with software as a software integrator. We see a more significant market opportunity in Mission Manager and Government Web Services over the long term than C2, Intel, and data platforms alone. We have already launched Mission Manager projects, starting with the US Army, a customer whose needs and feedback have heavily shaped this offering. We continue to invest in relationships with the defense industrial base to help them bend metal more profitably and efficiently. In their earnings calls, America's primes signal that they're pulling back from getting substantially burned on firm fixed price contracts. This is a giant step in the wrong direction for America. So we want to lean in and help them optimize their supply chains, their production plans, quality, and overall delivery against these contracts that have enormous opportunity to generate margin for them. But we are also working aggressively with new entrants to start with Foundry as their production software from day zero. M-Day was yesterday. We have no time to waste to mobilize America's industrial base to ramp production. Finally, our products could not be playing a more central role for real-world events. Our AI-enabled platforms are being leveraged maximally to support key U.S. government goals in the Middle East. We have surge support to Israel to enable the Israeli Defense Forces and intelligence services to leverage Gaia, Gotham, Foundry, and AIP to tackle a growing list of use cases from tactical command and control, visual intelligence, forensics, readiness, and production. At the same time, great power competition with China remains top of mind as we continue to invest in moving more of Palantir's mass west of the international date line. And we continue to support Ukraine's efforts directly and through allies. When the bat signal goes up, Palantir's Gotham platform and its family of products have always answered the call. At the same time, monetization of these efforts will take time. The principal reason is that the DoD is at the very beginning of a long-term allocation shift from hardware to software. For example, the Army is spending a mere 0.015% of its budget on command and control software in fiscal year 24. But as we confront crisis and conflict in 3 theaters, this is changing. Growth is being driven by the incredible dynamism of the U.S. commercial market, and U.S. government will follow. With that, I'll hand it over to Dave to talk us through the financials.
Thanks, Shyam. We had an exceptionally strong fourth quarter marked by our outperformance across revenue, profitability, and cash flow. Revenue growth accelerated to 20% year over year in Q4 on the back of our U.S. commercial business, which alone grew 70% year over year, a result driven by our momentum in AIP. Adjusted operating margin continued to expand to 34% in the fourth quarter, highlighting the strong unit economics of our business. We beat the high end of our guidance range on both revenue and adjusted operating margin, driving an 800 basis point sequential increase to our Rule of 40 score from 46 in the third quarter to 54 in the fourth quarter. We also delivered our 5th consecutive quarter of GAAP profitability. In 2023, we generated $210 million of GAAP net income, a $584 million increase from 2022. In the fourth quarter alone, we generated nearly $100 million in GAAP net income. We also delivered our fourth consecutive quarter of GAAP operating profit, generating $120 million of GAAP operating income in 2023, a $281 million increase year over year. Our GAAP operating profit accelerated in each quarter of last year, and in the fourth quarter alone, GAAP operating income increased 65% sequentially to $66 million, our highest quarter ever of GAAP operating income. We generated over $300 million in adjusted free cash flow in the fourth quarter, representing a margin of 50%, and over $730 million of adjusted free cash flow for the full year. Turning to our global top-line results. Fourth quarter revenue accelerated to $608 million, up 20% year over year and 9% sequentially. We generated $2.23 billion of revenue in 2023, representing a growth rate of 17% year over year. We generated $1.38 billion in total U.S. revenue in 2023, representing a growth rate of 19% year over year. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 20% year over year and 8% sequentially, and full year revenue grew 20% year over year. Customer count grew 35% year over year and 10% sequentially to 497 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 11% year over year to $55 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 32% year over year and 13% sequentially to $284 million. Full year commercial revenue grew 20% year over year to over $1 billion, surpassing the billion-dollar mark for the first time. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 35% year over year and 12% sequentially, and full year commercial revenue grew 28% year over year. Fourth quarter commercial TCV booked was $699 million, our highest commercial TCV quarter in the company's history, representing 156% growth year over year and 74% growth sequentially. Last quarter, our U.S. commercial business saw rapid acceleration and unprecedented demand. Fourth quarter U.S. commercial revenue grew 70% year over year and 12% sequentially to $131 million. Full year U.S. commercial revenue grew 36% year over year to $457 million. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 71% year over year and 8% sequentially, and full year U.S. commercial revenue grew 52% year over year. Our momentum in AIP is driving both new customer conversions and existing customer expansions. The transformation that AIP is having on our business is best highlighted in our U.S. commercial bookings and backlog. In the fourth quarter, we booked $343 million of U.S. commercial TCV, representing 107% growth year over year on a dollar-weighted duration basis. Total remaining deal value in our U.S. commercial business grew 32% year over year and 28% sequentially. Our U.S. commercial customer count grew to 221 customers, reflecting 55% growth year over year and 22% growth sequentially. Fourth quarter international commercial revenue grew 11% year over year and 14% sequentially to $154 million as we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. As Ryan mentioned, we've been capturing value and footprint from AIP momentum, and two examples are from our work with Fujitsu and Sompo. These customers had been using AIP for months prior to the deal's closing, resulting in some revenue catch-up last quarter. Full-year international commercial revenue grew 9% year over year to $546 million. Revenue from strategic commercial contracts was $20 million for the quarter. We anticipate first quarter 2024 revenue from these customers to decline to between $14 to $16 million, compared to $33 million in the first quarter of 2023. We anticipate 2024 revenue from these customers to decline to approximately 2% of full-year revenue, compared to approximately 4% of revenue in 2023. Shifting to our government segment. Fourth quarter government revenue grew 11% year over year and 5% sequentially to $324 million. Full-year government revenue grew 14% year over year to $1.22 billion. Fourth quarter U.S. government revenue grew 6% year over year and 3% sequentially to $237 million. Full-year U.S. government revenue grew 11% year over year to $921 million. As Ryan mentioned, while our fourth quarter U.S. government results are muted due to the timing of larger contract awards, we expect our U.S. government business to re-accelerate in 2024. Fourth quarter international government revenue grew 27% year over year and 11% sequentially to $87 million, bolstered by our work in healthcare and defense. This included the receipt of funding from a partner nation related to our ongoing efforts in Eastern Europe, which resulted in a revenue catch-up for the quarter. Full-year international government revenue grew 23% year over year to $301 million. We had an outstanding quarter of bookings. Fourth quarter TCV booked was $1.15 billion, up 192% year over year and 38% sequentially. Net dollar retention was 108%, an increase of 100 basis points from last quarter. Net dollar retention does not include revenue from new customers that we acquired in the past 12 months and therefore does not yet fully capture the acceleration in our U.S. commercial business. We ended the fourth quarter with $3.9 billion in total remaining deal value, an increase of 5% sequentially, and $1.2 billion in remaining performance obligations, an increase of 28% year over year and 26% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter and 82% for the year. Adjusted income for operations, which excludes stock-based compensation expense and related employer payroll taxes, was $209 million, representing an adjusted operating margin of 34% and marking the fifth consecutive quarter of expanding adjusted operating margins. Full-year adjusted income for operations was $633 million, representing a margin of 28% and 600 basis point increase compared to 2022. Q4 adjusted expense was $399 million, up 1% sequentially and up 1% year over year. Full-year adjusted expense was $1.6 billion, up 7% year over year. Our bottom line outperformance in 2023 has positioned us to be able to escalate investment and resources to AIP. As a result, we expect expenses to increase in Q1, but remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and operating income. In the fourth quarter, we generated GAAP operating income of $66 million, representing an 11% margin, our fourth consecutive quarter of GAAP operating income. Full-year GAAP operating income was $120 million. We generated fourth quarter GAAP net income of $93 million, representing a 15% margin, our fifth consecutive quarter of GAAP profitability. Full-year GAAP net income was $210 million. Fourth quarter adjusted earnings per share was 8 cents, and GAAP earnings per share was 4 cents. Full-year adjusted earnings per share was 25 cents, and GAAP earnings per share was 9 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 54% in the fourth quarter, an 800 basis point increase to our Rule of 40 score from the prior quarter. We continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the fourth quarter, we generated $301 million in cash from operations and $305 million in adjusted free cash flow, both representing a margin of 50%. In 2023, we generated $712 million in cash flow from operations and $731 million in adjusted free cash flow. We ended Q4 with $3.7 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q1 2024, we expect revenue of between $612 and $616 million, adjusted income from operations of between $196 and $200 million. For full year 2024, we expect revenue of between $2.652 and $2.668 billion, U.S. commercial revenue in excess of $640 million, representing a growth rate of at least 40%, adjusted income from operations of between $834 and $850 million, adjusted free cash flow of between $800 million and $1 billion, GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our earnings. There's really so much to say. Obviously, our performance in U.S. commercial is extraordinary. Some would say bombastic. The numbers that just fly off the screen are the 70% year-on-year growth in Q4, The numbers that I almost had to turn the page when I saw them were the 100 and over 100 contracts over $1 million, 37 over 5, and 21 roughly over $10 million. It's almost inconceivable to do that many contracts given the way our product used to be. And so what you see is a convergence of our product being easier to use, an augmentation of its charisma, both driven by developments in AI, large language models, which make the product approachable Foundry to the broader market. You also see just this enormous demand and our ability to meet that demand with a new piloting approach that we call boot camp. So we went 2 years ago, we did 92 pilots. And last year, really mostly the second half of the year, we did over 500 boot camps. I go around the country now telling CEOs, CTOs, and really whoever has $1 million to buy our product and transform their enterprise, take everything you've done in AI since you started, put your best people on it, and we're going to show up at any time you want, and we're going to run your data at a boot camp for 10 hours. And then you compare your self-pleasuring to our operationally relevant, commercially valuable, critical to your enterprise results. Our 10 hours, your 10 months. Any products you want, any vendor you want, any hyperscaler you want, you pick them, we'll show up. The reaction to this, because what America has obviously realized is this is real. But if you took the total number of people, total number of enterprises that are doing AI of any kind, including algebra, and said it would be probably less than the 300. We have 300 customers that are creating operational results using our AIP. Operational meaning, define it how you want. I'm defining it as they'll pay $1 million or more for it. So it's real. And we're doing this at a scale and pace that is inconceivable for Palantir up until recently. So you just have number after number after number, interface after interface. There are some caveats. Europe has decided that they are not going to engage in this revolution. There are other caveats for our society. I don't want to spend too much time on that, but the winners are going to win more. This is a revolution for incumbents that have distribution and already strong products, which is why we're massively outperforming. There's some caveats for us internally. We're having to rebuild the whole system, our whole company, to deal with this demand. We have a latent, nascent sales force that has put its tiny toe in the water and has noticed it can move around. We have to build that into a strong, aggressive machine. There's some positive caveats. We're doing this our way. We are proud of our work on the front. We are proud that we support the U.S. We are proud that we support the U.S. military. We are proud to have an operational, crucial role in Ukraine. And I am exceedingly proud that after October 7th, within weeks, we were on the ground, and we are involved in operationally crucial operations in Israel. I know of no other software company in the world that has been engaged by Ukraine and Israel, or in general, I'm not sure they have bought software from any other company at our scale. These are momentous events built on the back of a 20-year assumption that software would define our reality. The winners would be those that understood software, rejecting linear, narrow, sales-driven software, Frankenstein monster infrastructures that have been so historically popular for investment in Silicon Valley, rejecting sophism as not only an approach to business, meaning I only say what I believe if it doesn't matter, or I never say what I believe. Those assumptions have seeped into our products, whether they're a military product or they're Foundry or Ontology or AIP. They also, by the way, for those listening who think, our strategy is crazy. Many of your best people are applying to Palantir now. So while we may be crazy, we are being bombarded by people who want to work at this company. Bombarded. I cannot, a day does not go by where I'm not getting a call, an email, 50 attempts to get into our company. We are white hot in recruiting. We're a 20-year company with the strongest recruiting I've ever seen from a company that's historically had the strongest recruiting in the most competitive environment in the world, Silicon Valley. That is because we stand behind our values and because we intend to win with those values, which we're proving. So this was an extraordinary last year. We also took care of making sure we're aligned internally on comp. We are streamlining our events, the way we go to market. And I would also say from the perspective as the leader of our movement, nominally called the CEO of our company, we have never been this aligned internally. We are a company that engages the most talented, interesting, and difficult people in the world. Some of them are at this table. And there has never been a time where we have been this motivated, this in unison, and this proud of our company and our accomplishments. And so I'm proud to be proud with them, and we are going to keep on our efforts. And I foresee a very, very strong year, especially in U.S. commercial. I would also say the strength of our U.S. commercial and the strength of our products being used in the most difficult and most important war zones in the world is going to have a handoff function into USG. And I'm optimistic that handoff function will happen, and we will be as successful there as we are in U.S. Com.
With that, we'll begin with a few questions from our shareholders before we open up the call. Our first question is from Andrew. Given the significant increase in demand for AIP, could the management team elaborate on the advancements made in formulating monetization strategy for these offerings?
Great. Yeah, you're right to comment. The demand is off the charts for AIP, with boot camps as the delivery mechanism for AIP, and we're seeing AIP drive the expanding addressable market that we're seeing. As Alex commented, we closed 103 deals in Q4 alone, over $1 million. Having been involved in many of those directly and on the ground, I can tell you the feeling, the demand, the excitement over AIP and over Palantir is unlike anything I've seen in the 14 years I've been here. And we feel that. We feel that in a tangible way on the ground with our customers. And we're starting to see the beginnings of that in our Q4 results. In October, we set the goal of executing 500 boot camps for top of funnel for AIP. As noted, we've already exceeded that with over 560 boot camps just about 4 months later, and that is only continuing to increase that momentum. Then you see the results in U.S. commercial, 70% year-over-year growth in revenue in Q4, 55% growth in customer count year-over-year, 107% growth in TCV closed on an adjusted basis, and then you see emerging from that the archetypes to the question on monetization. The archetypes of the types of monetization we're seeing. Either it's boot camps that are quickly converting to paying customers, or it's expansion of existing customers, or it's customers where maybe we've been engaged for a while, and with the introduction of AIP, that whole process has been accelerated. We're seeing that across the board, and yet at the same time, we've barely touched that addressable market, and we're really only at the beginning. So excited to see where that takes us.
Thanks, Ryan. Our next question is from Tanner, who asks, what kind of interest has the Fed Start program seen as of late? Has the market responded to this, and will there be additional marketing made towards these startups? And relatedly, when do you expect Apollo to be a significant contributor to Palantir's revenue?
Great, thanks, Tanner. Yeah, Fed Start's been a hit, and I think it's easy to understand why. There's been $100 billion of capital that's flowed into the defense tech community at large. No one can afford the 2 years and $2 million it takes to achieve this accreditation. This provides market access. We've started with an intense focus on IL5, bringing folks to the DoD market. We plan to release an IL6 Fed Start at the end of Q2 and FedRAMP High at the end of Q3, early Q4. And we're also going to be taking this to our allies. So we intend to launch Fed Start with the UK on the secret network and above top secret network later this year. Apollo is having its moment. I think it's the charisma it has with customers when they see it running at scale, managing all $2.2 billion of our revenue. I think a big part of this is they've spent the last 2 years trying to solve these problems on their own and then viscerally understand how much value it can contribute to them, how much it can accelerate them, both on the government program side, but also on the company side, where companies are struggling with how to efficiently deliver modern software into these environments. But I think that the bigger thing that I'm really excited about is Mission Manager, which is Apollo, Rubix, which is our zero trust compute and networking infrastructure, and the Ontology Software Development Kit, the OSDK, as a combined offering to the government to really give the government what they've been asking for, which is infrastructure that allows them to build and manage multi-vendor, big tent ecosystems that drive continuous competition and allow the government to actually control the interfaces and avoid lock-in. And so you can think of FedStart as actually the first product that we've launched on top of Mission Manager infrastructure. We've started doing other projects, including Army C2 work, but that's going to be a very exciting trend for us.
Let me just give an addendum here. Sham launched and built FedStart, but but one of the most important things it did is before we launched FedStart, the $100 billion of investment in kind of new defense tech largely had the impression Palantir was competitive with them. And we weren't competitive with them. And FedStart aligns all those venture capitalists and all their investments and most of their companies with Palantir, because we can allow them to get onto classified networks much quicker so that they can actually show results to their investors much quicker. And that means a lot of the resistance to us is not only disappearing, but it's actually been converted into support for Palantir, support for what we're doing. And those people are really helping spread the obvious Palantir gospel. Instead of wondering how they can compete with us, they're wondering how we can succeed together.
Thank you both. Our next question is from Keith. Is your greatest competitor still your potential customer's own IT department, or has that changed?
Thanks, Keith. We certainly used to feel that way, but when you look at boot camps, you look at how much charisma AIP has with IT, and the fact that we're winning with IT, with Apollo, with the OSDK, with capabilities like Marketplace, that's certainly not the case anymore. IT has become some of our biggest champions. And I think what that's revealed for us is that perhaps the issue was never actually IT. It was this software industrial complex. Everything Alex was talking about earlier, these thin products that were really designed to sell, and they're more like a drug than they are like medicine. And this sort of strict adherence to architectural conformity. But what I think is exciting about Gen AI is it's blown up all of that. You know, it's been a big reset button here. The whole map, the whole architecture is up for grabs, and we're working very closely with IT to write that map, to write the architecture that is actually delivering all of these operational use cases for these customers.
Now, one of the coolest things about going to these meetings is it used to be 3-4 years ago, you could predict who was going to like us and who wasn't, and it's just not anymore. You go to these meetings and there'll often be the IT person telling the CEO, like, look, we have no choice. We need to install this quickly. And so there's a cultural shift in the U.S. I don't think it's outside the U.S. the case, but inside the U.S., people in IT are responsible for business value. This creates business value. And they're often responsible for global business value. They're not that interested in putting together a PowerPoint and showing how that could work in theory. They've got to show themselves, their company, their workers, the whole, that they're going to get actual revenue, either driving or quality of revenue driving results quickly. And they are almost exclusively now our friends. Maybe they can talk to some analysts. Like we can convert you guys too.
Thanks. Our next question is from Mariana with Bank of America. Mariana, can you please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So I have two questions, one in US government and the second one today on financials. So the first one is this. You mentioned in your prepared remarks, reaccelerating US government growth and opportunities across the board. But this is contrasting to what we have heard from the primes this quarter. They have agreed that more things are moving towards software, but they argue that the DoD has to figure out how to buy software, and they have to figure out how to sell software. From your point of view, how large is the change that is needed in this award approach, but also how large is the advantage that Palantir has in this environment where you have been selling software for a long time now?
Yeah, look, we've been doing this for 2 decades, as you point out, and I think that gives us a perspective of what was it like 2 decades ago and what is it like now. And it's wildly different, and so much has changed. Now, I don't want to underestimate how much has to continue changing, and I think the department recognizes that and is working on that. But to not acknowledge the progress, I think would be disingenuous here. Unlike the primes who used to focus on hardware and now responding to software, we've always focused on software. One of the things about software is it evolves incredibly quickly. If you think about the software we were deploying to do the Afghan non-combatant evacuation operations and how much that evolved moving into Ukraine, how much that evolved moving into the current crisis in CENTCOM, it is evolving faster than procurement can procure it. And I think one of the unique strengths that we have is that we are investing and mutating and managing the software independent of the actual procurement actions. And that means that we always have software that's so far in the future that it will meet the moment that the DoD actually has.
As an addendum to that, the core thesis of Palantir was always the reality of a disjointed, violent world forces Pareto-optimal conditions on institutions. So I believe that everyone knows we have the best software in the world. It may not matter in a non-dangerous environment, but it did matter in Ukraine and Israel, and who did they buy? It does matter. Our software is running I'll never know what I'm allowed to say, but in among the most critical places in the DoD. If we are forced to fight a 3-pronged war, you cannot do that even from a perspective of keeping our munitions ready without accurate software. So the more dangerous, the more real it gets, the more battle-tested and real your software has to be. I believe it's about to get very real. Why? Because our GDP growth is significantly better than China's. Now, I know the always wrong crowd says we then should get peace, but I'm telling you that the rational result of the rational consequence of that is our adversaries are like, America's going to be stronger tomorrow than today. It's like they don't have a GDP story because they do not build these systems as well as we do. They do not have the tech community we do, and they do not have the U.S. market like we do. Look at our results. And so as this becomes more and more dangerous, every company in the world, whether they're small, big, whether they're a startup, whether they're one of the largest primes, or whether us, is going to have to actually prove their software works on the battlefield. We love that. We want to prove, and we welcome and relish proving environments. If it was up to me, software would only be deployed at America and Western allies if it was proven on the battlefield. Unfortunately, for us, our adversaries are going to force that kind of adjudication. And for those of you who can't evaluate that because you don't have access to our software on the battlefield, though you could read the news and see what Israel has done and what Ukraine has done, look what's happening in U.S. commercial. You have a completely rational environment where we're deploying and growing the way we're growing with almost no sales force. And it's because it really matters. And when it really matters, the fact that they may not like my jokes or my habits, it will protect your life. And that's why we're going to do well.
Thank you, Alex. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. So I think inconceivable is the right word, in terms of, everything that you produced this quarter. My question would be, are you starting to actually see an acceleration in terms of AIP customer engagement, not even just from Q4, but even starting 2024?
You want to handle that as the man on the front line?
Yeah, I mean, the answer is yes, absolutely. And I think, we're still very early, obviously, with AIP and the rollout and very early in the market. But as far as, what we're seeing from customers, just see like kind of Q3 to Q4 results, and then what we're seeing in the conversations we're having with customers, the way that it's being adopted by the business, as Alex talked about, in the conversations we're having with customers, we're seeing that acceleration. We expect that to continue.
Also, just like we do these AIP conferences, I think we invited you and your team. We can't do enough of them. We're limiting the number of people who can come. It's like a rock concert. It's like, yeah, if you know somebody, we can get you in the back. We can get you backstage. It's. By the way, for those of you who are evaluating our company, we are going to invite all of you to our boot camps. Please use, as you did, but take a look at the software. It's like, we are not arguing in the abstract or in a PowerPoint or according to what you may have learned at business school that is better. We are arguing that it is better. And there's no other way to show that but to do it. But to your question, we're already overfilled for our AIP boot camp. And it's just, we don't know how to deal actually with this demand. And so we're rebuilding the company. We have a lot of employees in Germany and France. I'm telling them it's time to pack up and come to America. I'm telling our hiring, we are hiring here. We are having, as I mentioned, a bonanza in people wanting to work here because people are, quite frankly, tired of working for people who seemingly only have an opinion when it doesn't matter and with products that may not work. We're looking at, I'm getting personally involved in the recruiting again. To get more people, but exactly the right people, and we're going to scale against the demand. But it's a real thing.
Thank you. Alex, as usual, we have a lot of our shareholders on the line. Is there anything you'd like to say before we end the call?
I mean, we are fighting for the West and its allies to be stronger, and I very much appreciate your support. At this company, we think about our investors. Our most important investors are at Palantir. Our second most important investors are people investing their own money. And we relish your support. And it gives us a lot of motivation. I meet individual investors every time I go to a customer, basically. And I've had individual investors I've met at 2, 3 a.m. on a VTC, and I ask them, well, why are you working at 3 a.m. to make your enterprise better in AIP or Foundry? And they basically all say the same thing, because Palantir is fighting for my rights and my liberty. And we are fighting for your rights and your liberty, and we are going to continue to fight for that the way we do that, which is by delivering the best products to our allies, by hurting our adversaries, and by giving U.S. commercial the strength it needs to massively outperform every other country in the world. So thank you.
Thanks, Alex. That concludes Q&A for today's call.
Is that it? ... Is that it? I'm assuming this is just over. All right, guys. So we're going to go ahead and call that a finish. I don't see anything else by them. So I guess that's it. Yeah, that's it. So again, guys, if you haven't already, check out our sponsors. Palantir, almost up to $20 a share. Almost up to $20 shares. We'll see if it hits it or not, man. It's getting pretty close. It's up to 1990 here. 1990. Remember, guys, we're going to be back day trading the open live tomorrow morning. So just be ready, guys. We'll be back later on. Again, if you haven't already, check out our sponsors. If you want to be able to day trade, short, buy market, sell market, we're up to $19.94, almost $20 a share. We're getting pretty close. If you want to be able to day trade with limited risk, try a funded account program. Don't put up thousands of dollars of your own money and most likely lose it. You could try a funded account program. You still have some pressure. If you pass the test, it's a challenge. If you pass the challenger test, they fund you 50 to 150K with a 90% split. Base one's only $49 to take the challenge. But if you lose, instead of losing thousands of dollars, you're only going to lose what you pay for the combine. It limits your risk, and it's 90% split once you're funded. It's the best of both worlds. They're a sponsor of mine. Great way to help support the channel. I'm biased, of course, because they're a sponsor, though. And so understand that team. Palantir, almost up to $20. 1998. But yeah, you could day trade futures. There's no PDT rule in futures. You could day trade short, all that good stuff. Here's the link. Check it out. Almost here, guys. We're at $19.98. I want to stick around just to see if we hit this high. Let's see if we do. We're almost there. 1998. 97. 97. Come on, dude. We got to hit $20. Look, I'll even buy more shares just to see if we can. Look, I'm going to help it. Let's try to help this. Feel me? Oh, wait. I'm in after hours. All right, I bought another 25 shares. Look, I'm helping the. Let's hit 20. Almost there. Look, we're right at 20. Look at our poll numbers. Our poll is asking if it'll hit 20. 96, 97, 98, 98, 97. Let's see if it will. I don't know. The float's not small at all for Palantir. What's the Palantir float? It's not small. I'm just kind of trolling a little bit here. The float is 1.83 billion, guys. 1.83 billion. But listen. 98. 2 cents. We need 2 cents to hit $20. Part of my OCD is just like, do it. 97. 95. Yeah. 98. Look, we're still at 98. We haven't really retraced much either. There's the $20 level we gave for our live stream poll. Should have bought 50. I know, man. Listen, I'm struggling, slacking. 96, 95. It's still holding. That's the only reason I'm still streaming here. I'm probably about to close it, guys. I just want to see if it holds. 96, 95, 97, 95, 96, 94. You know, stocks do have this tendency to... All right, there's a new minute candle just opened up. Let's see if we get that push. Stocks do have a tendency to go right up to major hold dollars and just tap them. And so this might be one of those moments. 95, 94. All right, guys. 95. 96. Here we go, 97. Hey, later, sir. Feels kind of dull in here with no music, too. 97. Look. You would think it would be able to hit just 5 cents. So I think maybe a lot of people are using this as a profit target. 96. 97. Laugh out loud at all the people that said it wouldn't get anywhere close to $20, though. We're basically here. I'm just going to call it a W. 98. Oh, 98 is the new high. Now we're literally 2 cents away. It's got to at least tap it, right? I think people are going to start. All right, we're here. All right, guys, listen, I'm going to go ahead and get out of here. I'll see you guys in the morning. We'll see if it hits $20 while I'm gone. All right, come join my live stream in the morning and tell me it hit $20. That's the first thing I want you guys to say when you join the stream in the morning. Is Palantir hit $20? If it does. If it doesn't, you could troll me endlessly and make fun of me. All right. But, again, we're so close, guys. We're so close. 2 cents away. Hey, thank you, mister. What's up, Matthew, Henry, Fox, Franz, Alan, Daphne, Ron, Peter, Joe, Shane, Sir, Pawn, Ban, Elite, Slugger, K, scrolling through the chat, Jeff, Aldrin, Fu, YZ, Hamza, Lou, John, Gilbert, Tay, North, Marketer, Ed, Bobby. Man, we are so tight. Look at the range here. I'm just curious. Like, look at the range. We're like, it's so tight of a range. It's literally at a 5 cent range for 5 minutes here up here. I think everybody's thinking the same thing. Will it hit $20? $20 is such a milestone level. I think like Palantir investors want to post about it. Like, yo, Palantir hit $20. And so I think everybody's trying to help it hit that level, but it's just not doing it yet, you know? But what a tight range for 5 minutes, too. Look, 99, guys. It's 1 cent away. It's literally 1 cent away. 97. Is this it? Is this the time? Engulfing green candle showing up. 1999. For all the haters, I'm going to end this poll just to show you guys. Look how many people bet against it. Almost 1,000 people. 280 people or so bet that we wouldn't hit 20. All right, guys. Look, I can't sit here for another minute anyway. I gotta go. I'm gonna go get some food. I'm gonna get out of here, guys. Y'all be safe. I'll see you guys later. Y'all be good. I'll see you guys later. Look, if you want to check out Top Step, here's the link. You don't have to post about it or whatever. Here's the link. Check it out. They're a sponsor of mine. I'm biased. Y'all be good. I'll see you guys back bright and early tomorrow morning. Tomorrow morning, we've got some earnings, right? Don't we have some earnings? Tomorrow mornings, we've got Eli Lilly, Spotify, Hertz, Toyota, Pfizer, BP, Spirit Airlines, a bunch of other ones too. So y'all check them out. Look, we're at 1998. ... 97. It's got to do it, right? Let me catch back up with the degenerates here in this chat. Keep on scrolling. I like the earnings call. I want to let it go. I'm just going to get out of here, team. I'm gonna get out of here. Y'all be good. Later, guys. Join me tomorrow morning and troll me, you know.